If you've been holding gold in your safe, thinking it's the ultimate protection against what's coming, I need you to stop what you're doing and pay very close attention to what I'm about to share. Because what's happening right now in the precious metals market is something most people won't see coming until it's too late. And by then, the opportunity to position yourself correctly will have already passed. Let me paint you a picture of what's unfolding. Gold has been climbing steadily, breaking through resistance levels that analysts said would hold for years. Silver has been even more explosive, moving in ways that suggest something much bigger is brewing beneath the surface. But here's what nobody's talking about. The real story isn't just about prices going up. It's about a fundamental shift in how wealth is being stored, protected, and transferred on a global scale. Think about this for a moment. When you keep gold in your safe at home, you're doing something that feels right. It's tangible. It's yours. Nobody can click a button and make it disappear from a database somewhere. But there's a critical piece of this puzzle that most people are missing, and it's costing them in ways they don't even realize yet. Central banks around the world have been accumulating gold at a pace we haven't seen in decades, not just buying a little here and there. We're talking about systematic, aggressive accumulation. The kind of buying that tells you they know something the general public doesn't. When the institutions that control monetary policy start hoarding physical metal, you need to ask yourself what they're preparing for. Now, before we go deeper into this, I want to make sure you have access to something that could be incredibly valuable for your situation. I've put together a comprehensive guide that shows the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's completely free, and you'll find the link in the description below. This guide breaks down strategies that most financial advisors won't tell you about, because frankly, they're not in their best interest to share. But they might be exactly what you need to hear right now. Let's get back to what's happening with gold and why keeping it in your safe might not be the complete solution you think it is. The global financial system is going through a transformation that most people can't see because they're too focused on day-to-day price movements. They're watching the waves while missing the tsunami building on the horizon. Consider what's been happening with the dollar. For decades, it's been the world's reserve currency. Countries held dollars because they needed them for international trade. They trusted the system. But that trust has been eroding, and the cracks are starting to show in ways that can't be ignored anymore. Nations that used to be reliable allies are now diversifying away from dollar-denominated assets. They're not doing this because they want to make a political statement. They're doing it because they're reading the same economic data you and I have access to, and they're coming to some very uncomfortable conclusions about where this is all headed. The BRICS nations have been particularly aggressive in this shift. Brazil, Russia, India, China, and South Africa aren't just talking about alternatives to the dollar anymore. They're actively building the infrastructure to trade without it. They're settling transactions in their own currencies. They're creating new financial institutions that bypass the traditional Western-dominated system entirely. And at the center of all this restructuring, you'll find gold playing an increasingly important role. But here's where it gets really interesting, and this is where your gold sitting in that safe becomes part of a larger conversation you need to be having. The physical gold market and the paper gold market have been diverging in ways that suggest a reckoning is coming. For years, the price of gold has been largely determined by trading in futures contracts, derivatives, and other paper instruments that represent claims on gold, but aren't actually backed by physical metal in any meaningful way. It's been estimated that for every ounce of physical gold that actually exists, there are potentially dozens or even hundreds of paper claims on that same ounce. This works fine as long as everyone plays along with the system. As long as most people are content to own paper promises instead of demanding physical delivery. But what happens when that changes? What happens when a critical mass of investors, institutions, or nations decide they want the real thing instead of the IOU? We've already seen glimpses of this. There have been moments when the premium for physical gold over the paper price spiked dramatically. Times when you couldn't buy physical metal at anywhere near the spot price because demand for the real thing overwhelmed available supply. Those were warning shots. Brief moments when the curtain pulled back and revealed the fragility of the whole system. Now, let's talk about something that might make you uncomfortable, but it's crucial you understand this. That gold in your safe, as secure as it feels, exists outside of certain protections and opportunities that could be critical in the years ahead. I'm not saying it's wrong to own physical gold at home, but I am saying it's incomplete as a strategy if that's all you're doing. Think about your retirement accounts for a moment. You've spent decades building them up, contributing regularly, watching them grow, hoping they'll provide the security you need when you stop working. But those accounts are denominated in dollars. They're invested in a system that's showing increasing signs of stress. And when the next crisis hits, and it will hit, those accounts are going to be vulnerable in ways that most people aren't prepared for. This is where the conversation gets really important, especially if you're sitting on retirement savings of $100,000 or more. There's a strategy that combines the security of physical precious metals with the tax advantages and legal protections of retirement accounts. It's called a gold IRA, and it's something that more and more Americans are looking into as they watch the warning signs multiply. I've put together a detailed guide on exactly how this works. It covers how you can get physical gold and silver into your retirement account without triggering tax penalties, how the process actually works, what the costs are, what you need to watch out for. It's in the description below, and if you're in that position where you have significant retirement savings and you're concerned about what's coming, it's worth taking a serious look at. The reason this matters so much right now is because of timing. We're at a point where the old system is clearly breaking down, but the new system hasn't fully emerged yet. That creates both danger and opportunity. The danger is that wealth stored in traditional forms could be severely impacted by what's coming. The opportunity is that those who position themselves correctly, who understand what's happening and take action before the crowd figures it out, could not only protect what they have, but potentially grow it substantially. Let me give you some context for why this moment is so critical. Throughout history, there have been periods where the monetary system went through fundamental changes. These weren't gradual, smooth transitions. They were often chaotic, disruptive events that caught most people completely off guard. In the early 70s, when Nixon closed the gold window and ended the direct convertibility of dollars to gold, it marked the beginning of a new era, an era of pure fiat currency, where money was backed by nothing more than government promises and the faith of the people using it. That system has lasted for over 50 years now, but nothing lasts forever, especially not monetary systems built on debt and promises. And the signs that this particular system is reaching its limits are everywhere if you know where to look. Consider the debt situation. Government debt has exploded to levels that would have been unthinkable just a generation ago. The numbers are so large they've become almost meaningless, trillions upon trillions, growing every single day. And here's the thing about debt at this scale. There are only a few ways it can be resolved. You can pay it back, which would require economic growth and fiscal discipline that seems politically impossible. You can default on it, which would be catastrophic for the financial system. Or you can inflate it away, which means destroying the purchasing power of the currency. Guess which option is most likely? Guess which option allows politicians to avoid making hard choices while appearing to keep the system functioning? That's right, inflation. And that's exactly what we've been seeing, despite official statistics that try to downplay the reality of what's happening to prices. This is why gold has been moving the way it has. It's not just speculation. It's not just traders playing games. It's a reflection of growing awareness that the currency itself is becoming less reliable as a store of value. And silver, with its unique position as both a monetary metal and an industrial commodity, has been showing even more dramatic moves as supply constraints combine with increasing demand from both investors and industry. But here's what most people miss when they think about precious metals. They think of it as just another investment, something you buy, hoping the price goes up so you can sell it for a profit. That's not wrong, but it's incomplete. The real value of gold and silver isn't just in their price appreciation potential. It's in their role as insurance, as a hedge against the kind of systemic risks that are building in the financial system right now. When you own physical gold in your safe, you have that insurance. You have something that can't be devalued by central bank policy, something that can't be frozen by a bank, something that has maintained its value across thousands of years of human history through the rise and fall of countless currencies and empires. That's powerful. That's important. But it's also limited in certain ways. That gold in your safe doesn't benefit from the tax advantages of retirement accounts. It's not protected by the same legal structures. And if you ever need to sell it, you're dealing with the complexities of finding a buyer, verifying authenticity, and handling the transaction in a way that's both secure and tax efficient. This is why the concept of holding precious metals within a retirement account structure has become so important for people who are serious about protecting their wealth. It combines the security and intrinsic value of physical gold and silver with the legal and tax benefits that retirement accounts provide. You get the best of both worlds. Now, I know what some of you might be thinking. This sounds complicated. It sounds like something that's only for wealthy people or financial experts. But that's not true. The process has been streamlined significantly in recent years. There are companies that specialize in helping people set up these accounts, handle the logistics of purchasing and storing the metals, and ensure everything is done in compliance with IRS regulations. The key is understanding how it works and making sure you're working with reputable companies that have your interests at heart. Not all gold IRA providers are created equal. Some have hidden fees. Some use high-pressure sales tactics. Some don't actually store the metals the way they claim to. This is why education is so critical. You need to know what questions to ask, what red flags to watch for, and what a legitimate setup looks like. Let's talk about what's happening in the silver market specifically, because this is where things get really interesting. Silver has always been gold's more volatile cousin. It tends to move in the same direction as gold, but with much bigger percentage swings. When gold goes up 10%, silver might go up 20 or 30%. When gold drops, silver often drops even harder. But there's something happening with silver right now that goes beyond just its typical volatility. The supply and demand dynamics are getting increasingly tight. Silver is used in an enormous range of industrial applications. Solar panels, electronics, medical devices, water purification, and countless other technologies rely on silver's unique properties. As the world pushes toward green energy and advanced technology, industrial demand for silver has been growing steadily. At the same time, silver mining hasn't kept pace. Most silver comes as a byproduct of mining other metals like copper, lead, and zinc. When those primary metals aren't profitable to mine, silver production drops even if silver prices are high. This creates a supply situation that's much more constrained than most people realize. Add to this the fact that silver has been historically undervalued compared to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been way out of line with historical norms. Throughout most of history, that ratio has been somewhere between 15 to 1 and 30 to 1. In recent years, it's been much higher, suggesting that silver is significantly undervalued relative to gold. What does this mean for you? It means that silver might offer even more upside potential than gold in the coming years, but it also means more volatility, more risk, and the need to really understand what you're getting into. This is another reason why having a comprehensive strategy, one that might include both gold and silver in appropriate proportions, makes sense for many people. The geopolitical situation adds another layer of urgency to all of this. We're living through a period of increasing international tension. Trade wars, actual wars, sanctions, and counter-sanctions. The global order that's been in place since the end of World War II is being challenged in fundamental ways. And whenever there's this kind of geopolitical instability, precious metals tend to perform well because they're seen as safe havens. But it's more than just safe haven demand. The geopolitical shifts we're seeing are directly related to the monetary system changes I mentioned earlier. Countries are using their financial systems as weapons. Sanctions are being deployed more frequently and more aggressively. And nations on the receiving end of those sanctions are looking for ways to insulate themselves from that kind of pressure. This is driving the move away from dollar dominance. It's driving the accumulation of gold by central banks. It's driving the development of alternative payment systems and trade arrangements. And all of this creates an environment where precious metals become increasingly important, not just for individuals, but for nations themselves. Think about what this means for the long-term trajectory of gold and silver prices. If we're in the early stages of a fundamental restructuring of the global monetary system, if more and more countries are moving toward gold-backed or gold-influenced currencies, if the paper gold market eventually has to reconcile with the reality of limited physical supply, then the prices we're seeing today might look incredibly cheap in hindsight. This isn't about trying to time the market perfectly. It's not about trying to buy at the absolute bottom and sell at the absolute top. It's about recognizing a major trend that's unfolding and positioning yourself to benefit from it, while also protecting yourself from the risks that come with the current system. Your gold in the safe is part of that positioning, but it's only part of it. A complete strategy considers multiple angles. Physical metals you can access immediately, metals held in tax-advantaged retirement accounts, perhaps some exposure to mining stocks for additional leverage, and always, a clear understanding of why you're holding these assets and what role they play in your overall financial picture. The mining sector is worth mentioning here because it offers a different kind of exposure to precious metals. When gold and silver prices rise, mining companies often see their profits increase dramatically because their costs are relatively fixed while their revenue is tied to metal prices. This can lead to outsized gains in mining stocks during bull markets in metals. But mining stocks also come with their own risks. They're subject to operational challenges, management decisions, political risks in the countries where they operate, and all the normal risks that come with owning equities. They're not a substitute for physical metals. They're a complement to them, offering different characteristics and different potential returns. The key is understanding how all these pieces fit together. Physical metals for security and insurance, metals in retirement accounts for tax efficiency and long-term wealth building, perhaps some mining stocks for growth potential, and all of it based on a clear-eyed assessment of what's happening in the world and where things are likely headed. Now, we need to talk about something that doesn't get discussed enough in these conversations: the psychological aspect of owning precious metals. There's a reason people feel good about having gold in their safe. It's tangible. It's real. You can hold it in your hand. In a world where so much of our wealth exists as digital entries in computer systems, there's something deeply reassuring about physical assets. But that psychological comfort can also lead to mistakes if you're not careful. Some people become so focused on accumulating physical metals that they neglect other important aspects of their financial planning. They might have too much of their wealth tied up in metals that don't generate income. They might miss out on other opportunities because they're overly concentrated in one asset class. Balance is crucial. Precious metals should be a significant part of your wealth protection strategy, especially in the current environment. But they shouldn't be the only part. You need liquidity. You need diversification. You need to think about your specific situation, your time horizon, your risk tolerance, and your goals. This is where professional guidance can be valuable, but you have to be careful about who you listen to. The precious metals industry has its share of people who are more interested in earning commissions than in helping you make the right decisions for your situation. They'll try to scare you into buying more than you need. They'll push products with high markups. They'll make promises about returns that aren't realistic. The guide I mentioned earlier addresses a lot of these issues. It helps you understand what questions to ask, what to look for, and what to avoid. It's designed to give you the information you need to make informed decisions without the pressure and hype that often surrounds precious metals investing. Let's bring this back to the immediate situation. Gold prices have been strong. Silver has been even stronger. The fundamentals supporting precious metals are as compelling as they've been in years. The risks in the traditional financial system are mounting, and the window for positioning yourself advantageously might be narrower than most people think. This doesn't mean you should panic. It doesn't mean you should liquidate everything and go all in on metals. What it means is that you should be taking this seriously. You should be educating yourself. You should be looking at your current situation and asking whether you're adequately protected against the scenarios that are becoming increasingly likely. If you're a retiree or approaching retirement, this is especially critical. You don't have the luxury of time to recover from a major financial crisis. If your retirement accounts get hammered by a market crash or a currency crisis, you can't just work a few more years to make up the difference. You need protection now. You need strategies that can weather the storm that might be coming. The good news is that you still have time to act. We're not at the point where it's too late. But we are at the point where delay could be costly. Every day that passes is another day where the risks are building and the opportunity to position yourself correctly is potentially slipping away. Think about the people who saw the warning signs before the 2008 financial crisis, the ones who took action to protect themselves. They didn't just survive that crisis. Many of them thrived because they were positioned correctly. They had assets that held their value or even increased while others were watching their wealth evaporate. The same thing happened in the 70s during the last major bout of inflation. Gold went from $35 an ounce to over $800. Silver went from $1.50 to $50. The people who owned precious metals during that period didn't just preserve their wealth, they multiplied it many times over. We might be entering a similar period now. The circumstances are different, but the underlying dynamics are remarkably similar. Excessive debt, monetary expansion, loss of confidence in fiat currencies, geopolitical instability. All the ingredients are there for precious metals to have another major run. But here's the thing. You can't wait until everyone else figures this out. By the time precious metals are on the front page of every newspaper and the lead story on every financial news show, the easy gains will already be gone. The time to position yourself is when the trend is clear to those who are paying attention, but before it becomes obvious to everyone. That time is now. The gold in your safe is a good start. But it's not enough by itself. You need a comprehensive strategy that addresses all aspects of wealth protection and growth. You need to understand the tax implications of your holdings. You need to think about accessibility and liquidity. You need to consider how your precious metals holdings fit into your overall estate planning. And you need to do all of this with clear, accurate information. Not hype, not fear-mongering, not sales pitches disguised as education. Real information that helps you make the best decisions for your specific situation. This is why I keep coming back to that guide in the description. It's not a sales pitch. It's a genuine educational resource that covers all of these topics in detail. It explains how gold IRAs work, what the costs are, what the benefits are, and what you need to watch out for. It gives you the framework for evaluating whether this strategy makes sense for you. And here's something else that's important. If you watch this video all the way to the end, which you're doing right now, you'll also get access to an exclusive one-on-one educational web conference. No obligation, no pressure. Just a chance to have your specific questions answered by someone who understands these markets and these strategies. This is only available to American retirees with at least $100,000 in retirement accounts because that's the level where these strategies really start to make sense. The point of that conference isn't to sell you something. It's to help you understand your options and make informed decisions. Whether you decide to move forward with a gold IRA or not, you'll come away with a much better understanding of how to protect your wealth in the current environment. So where does this leave us? You've got gold in your safe. That's good. That's smart. But it's incomplete. The world is changing in fundamental ways. The monetary system is under stress. Geopolitical tensions are rising. The traditional safe havens might not be as safe as they used to be, and the opportunity to position yourself for what's coming is still available, but it won't be forever. Take the time to educate yourself. Look at that guide. Consider whether a gold IRA makes sense for your situation. Think about whether your current strategy is really adequate for the challenges ahead. And most importantly, don't let inertia or fear of change prevent you from taking action that could be crucial for your financial security. The gold in your safe is a foundation. Now it's time to build on that foundation with a comprehensive strategy that addresses all aspects of wealth protection in the turbulent times ahead. The information is available. The tools are available. The question is whether you'll take advantage of them while you still can. Ask Galaxy AI.